Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. It has been obvious here, as elsewhere in the grains, that the market had moved sideways to lower from early June until mid-August. The problem here, compared to the other grain markets, is that we've had two competing patterns vying for the market's attention. First pattern was a July to September triangle come wedge pattern, pointing lower enough to be considered a wedge but not completely out of the triangle class. This pattern saw a final break higher in late August. Then there's the second pattern, a late July to early September bear channel. This one looked better at the time. In practice, the discussion is immaterial, as we have seen the market reach the primary and secondary targets for the triangle plus the target for the bull channel, and all have been exceeded. In this whole process, the market here as elsewhere constructed a new pattern. It built a mid-August to date ascending expanding wedge pattern, currently 357 to 369. I say to date, but last week prices dropped out of this ascending wedge pattern and pushed down through both the medium moving average, currently 337, and the long moving average, currently 341. We now just have here the slowly rising short-medium moving average, currently 336, which has supported the market, but which has been severely tested these past 2 weeks. This leads us to the same situation we have in other wheat markets. There are now the two avenues for this market, though there no doubt will be more available eventually. First is a straightforward move down with the appropriate potential targets for the ascending wedge pattern, which usually they're not very reliable, but anyway. Thus, a primary target X on the downside is in the 331 zone, whilst the secondary harder to reach target X1 is way down in the 296 zone. Then there is the second avenue. There's a possibility for the whole of the July to date action being not just a loose type of V bottom, but a loose type of V bottom with an extension. These extensions have something like a bull flag within them, and that is what may be being built here since mid-August. Personally, it looks a little slack as a pattern, but if the short-medium moving average still manages to hold the market up, despite the testing, and we then see prices revert back up, well, then this second scenario, the loose type of V bottom with an extension, suddenly looks a lot more interesting. UK feed wheat. Since mid-July, we had a shallowly bearish channel that morphed into a slowly descending broadening wedge pattern, which morphed again in mid-August into a bull channel, currently 292.10 to 310.60. 2 weeks ago, the market made a weekly key reversal down that broke down through the lower bull channel line and started the next move, this time lower. Prices additionally broke down through the medium and long moving averages, currently 371.70 and 377.5 respectively. This despite the long moving average being in the wrong place if compared to other grain markets. The short medium moving average, currently 273.20, which also had filled the role of a catcher's glove holding up the market, failed to do so and dropped the ball last week. To extend the metaphor, the 50% Fibonacci line of the July 2021 to May 2022 move at 262.5, which I suggested last week might fulfill that role that the short medium moving average failed to do, well, that has sort of held up prices, but it has not been without being tested. The coming days will tell if that has been enough. But one thing is for certain, and that is the market has broken down through the lower bull channel line, leaving us here, as elsewhere in other grain markets, with two avenues going forward. No doubt there will be more available eventually. The first is a straightforward move down with potential targets for the break below the bull channel. Thus, a primary target on the downside was already achieved in the 269 zone, whilst the secondary harder to reach target X1 is way down below in the 239 zone. This leads to the second potential avenue. It is the possibility for the whole of the July to date action being a possible V bottom, but a V bottom with an extension. These extensions have something like a bull flag within them, and that is what we may be being seen built here since mid-August. Personally, this looks a very tired and sick version of even a bullish halfway hesitation. So I would take a big pinch of salt with that idea, but you never know. Anyway, just in case we see this 50% Fibonacci line hold up the market and subsequently see prices revert back up, well, this second scenario, the possible V bottom with an extension, will suddenly look a lot more interesting. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.